Hey guys, Mike here. So, oh boy, what a freaking day. I mean, on steroids, CPI, right? CPI day is always one of the funnest days because you don't know what you're going to get. And if you just got home from work and you looked at stuff and it's super green, you're like, my goodness, CPI must have come down so much that the market is like, oh, and no. CPI actually went, inflation actually went up. Okay, but what do? We hit the measurements that were expected on the penny. Okay, but I'm going to show you because I'll show you the chart. I'm not lying. Like CPI actually has been going up in pretty much everything, right? So I'll show you that, but I'll also show you why the bond market went crazy today. It didn't know what to do. It was all over the place. Okay, I mean the 10-year yield looked like a crypto flying, right? IWM was all over the place. I mean, huge 0.75 to 1% move down. It was like 4 of them throughout the day for IWM, small caps, right? And I mean, honestly, I started, I don't do a script for those who don't know. I literally just put the video together and I have my thoughts and then I just go off the cuff, as you can probably tell. Well, I mean, 99% of YouTubers use a script. There's a script sitting right here where you can't see it and they just kind of read off the script that they put together. I don't bother doing that. So, I was actually laughing before I just started laughing before I started hitting record because it's funny. I mean, it's hilarious to watch it, right? I can't even, sit back there because I have multiple portfolios and, this is long. I got some options here and this is doing all that stuff. And it's great to see it. But when you just look at it, and I know there's people out there screaming. I see you guys in the comments, which we're going to clear one thing up very quickly here in just a minute, by the way, because some people don't know what the word pullback actually means and don't know their definitions. So I'm going to go ahead and make sure we're on the same verbiage when you see these videos. But, it's hilarious to see it because you can tell people who are short this market, right? Like they are beyond upset, right? They are beyond upset, or they're sitting in all cash or whatever. And they're just beyond upset and they're screaming, but Warren Buffett sold out a long time ago. He's at record cash. And that's why I did a whole video for members showing them you never follow Warren Buffett to get out the market or to get in the market. You know why? Because you ain't got over $100 billion to invest and buy all the dips and everything and to sit there and collect dividends beyond belief. Okay, that ain't your portfolio, and that ain't most people's portfolios. About 99% of portfolios aren't like that. Okay, that's why he can do what he does. It's not him; it's his company, right? But you can just see it, and once again, this proves today with CPI data. It ain't the economy's not the market. The market's not the economy, and they'll tell you all day long they care about it, but the truth is they just use the news to move the market where they want to move it. That's exactly what they do. Always remember that. Plus, already see it, and always drives me nuts when people are going to start lying to you, telling you, oh man, when they cut next week, boy, IWM, regional banks are going to fly and all this fun stuff. And I'm telling you, I'll show it to you. It has nothing to do with the freaking rate cuts for the Fed. It has nothing to do with that. It has to do with one thing. And I will show you what that one thing is. And if that goes down, yes, regional banks and IWM are going to moon. If it don't go down and it starts going up, right, especially in a very fast pace, you can forget about it. Okay, those two things will not rally. It's that simple. Okay, it's that simple. Now, we got a lot to cover, so let me get into it. Now that I got off of that one, you can see very quickly, I said we'd be lucky to get down to 0.5 fib, but if we break a certain level, this thing's going up, and of course, they just mooned it. I mean, just mooned it to all-time highs. See you later, right? That's why I said I definitely don't think we're getting out of the other shaded box. There's no way. And so, again, why? Because I said, look out. You got to pull out on these things and look out and say, what are we in? We'll adjust this. We're in an uptrend on the weekly, on the daily, right? I mean, this is an uptrend. I mean, what is S&P up 29% or some crazy mess right now when you include dividends, right? It's an uptrend. That's what this is. And by the way, for those who don't know, I just want to make sure we're on the same page. It's okay if you don't know this stuff. Whenever the market comes down, right, for a couple of days, whatever it is, I use the term pullback. I just use I go by the definition. A pullback is a small temporary decline in price. If you want to put percentages all you want. But we all know corrections are usually 10% or more, and then crashes are 20% more. But a pullback, if you have another term out there, maybe I don't know it, let me know. Okay, but I use the word pullback. That's just what I do. Let me know if you use in the comments. Now, even our guy over, Nikki Leaks, right? Falling prices of core goods over the last 18 months helped deliver a decent chunk of disinflation we've seen. That now has ended. Okay, and when you look at this, we'll scroll down. You see this is the 6 month, 3 month, all that fun stuff when it comes to CPI. I'm no genius, but that is turning up. All of those are turning up. Okay, That's just the way it is. I mean, you still shop and stuff. You're doing your Christmas shopping, and prices are still, they're kind of stuck. And we said this, when we get to this range where between 2, 3.5, whatever it is, depending on if you're talking about headline or core and all that good stuff, it's going to be tough to get it down. When you look up here, this is year over year, okay? And the other color, not the blue one, is less food energy. That's a turn up, okay? But it's not coming down, okay? 2.7 and 3.3. All right, when you come over here and look at month over month, what do you see here? I'm no genius, not at all. I don't pretend to be a genius, but I can see. I got eyeballs and I wear glasses to read. And when I look at that, do those lines look like they're coming down to you? Nope, surely don't. They don't. It's kind of stuck. So that lets you know the market knows this, but here's what they do. This is where they throw everything off. This comes out. I tell the members, oh, look at this stuff right here, man. That comes out, all of a sudden you're sitting at a 95% chance now, pretty much guaranteed, that they're going to lower it next week. Now, this can change, but of course, the bond market is sitting there going, wait a minute, and look at the 10-year yield. The 10-year yield, I showed you the trend line yesterday. We weren't through the top one. We had busted through the bottom one right there. You can clearly see, look at this. It busted through the top one now, today. But it's all over the place. I mean, this thing has now gone up almost 3.5% in a very short amount, just a couple days, right? We were down there. But look at this. It's all over the place. I mean, that is big moves for the 10-year in a very short amount of time. This is an hourly chart. And then it started going up a day. So then at one point in time, you got this thing rocketing up. IWM's IWM, I'll show it to you and just say all over the place, right? It's rocking it up. Small caps are rocking up. All this crazy mess, okay? High flying stuff. But this is the bond market saying, wait a minute. We're going to cut again, but inflation is not coming down and all this other crazy mess. So that's why people are trying to figure out, what are they trying to tell us here? What is the bond market saying? This is IWM. Rockets right up. Boom. Here comes the inflation data. Rockets right back down. What happens? The 10-year spike. So doing 1%. Then it comes up over 1% again. And then this was filmed at like 2. It dropped again by like 0.85%. Okay, so it was all over the place, but that's because the 10-year and the bond market's like trying to tell us something. We just know what the heck they're trying to tell us, to be honest with you, because it's just all over the place. And again, when you pull this up, we'll go back to the 10-year right here. Now, remember, we got data tomorrow. Okay, data tomorrow is going to affect the 10-year as well. But when you look at this, that's going up. Okay, and when you see these kind of spikes in the 10-year, it's supposed to put pressure on small caps and other types of stocks. That's what I'm talking about. It's been coming down, but now all of a sudden you got this pressure coming up since like, I think it's the 8th over there. And that's what happens. And so, I mean, like I said, I just put these trend lines in place like 2 days ago or something, and they already got broken to the upside. But when you look, we're going to put a horizontal resistance in here because as you can see, this area up here has been resistance. So are we expecting a rejection? Absolutely, we're expecting a rejection. Like I'm going to put it right there. But right above is an area where we've got multiple rejections. We're at this one right here. Should expect a rejection. If it comes up there, then we're talking about 4.318. You should get a rejection. That's what it's looking for. And if that happens, absolutely. Small caps and others are going to rally. I'm going to talk about that in just a second. Also, while I'm thinking about, please put your questions in the comments for Saturday's video. But of course, what is happening in this plain Jane right here? What's behind? What's behind? Where are we not put money yet? Oh, that's behind. Heading all-time new highs. Here, throw money. Money, right? That clearly is what happens, right? That's what's happening, excuse me. You can see it. Look what you see here. Microsoft, we talked about that one for the breakout. Apple, all-time highs. Google, we said, look, if it don't fill this gap, we're going to break this line. It's going to hit right here, and it's going to go to all-time new highs very quickly if it breaks that level right there. And boy, did it ever, okay? So now Google, all-time new highs. Meta, we know about. Boom, we talked about that for the breakout. Amazon, we talked about that one. All-time new highs. Tesla, right? Tesla, I'm going to move this up right here because that should be 215 support now. Tesla, excuse me. All-time new highs, man. I mean, just the options market, I ain't even going to bother showing it because it's a waste of time. The options were just, I mean, millions upon millions upon millions of calls, right? Look at this move, 100% in 49 days. Holy moly. NVIDIA, it's behind. Are they fixing to try to ramp it up? Is that what's fixing to happen? Like that's the lagging, right? We throw monies at laggers, right? That's what the market's been doing. It's just been throwing money at it and running them up. Now you look at Avgo or Broadcom. You don't think the market makers run this market? Look where they left this thing today. And guess what it does tomorrow? It reports earnings. So they left it about literally 1.5% away, but they report earnings tomorrow. And we talked about how this right here, normally you've seen it so many times, this pattern play out, right? Higher lows, but can't set a higher high, and then the earnings comes in and blasts it off or something. So we're going to see. Look at SMH. Sitting here, getting wedged again, squeezed in there. And when you look at this thing, you pull up our volume range, volume profile, you can see what's going to happen. If Avgo reports really good earnings and the market likes it and it wants to go, let me put the blinders on and say, wait a minute, what's behind semiconductors? Well, let's go ahead and try to push them too. If they do that, you can see there's not a whole lot of resistance right here, right? So that box between 263, 275 is where you're going to go. I don't think it'll take too long to even get there, to be honest with you, if the market really wants to do this. And what else are you seeing? The moving averages sitting there pressing together. You're above the 200. Now you're above the 100. Look what happened last time this happened. Bounced on the 200, broke the 100. Boom. I don't expect anything crazy like that. That's insane. But again, anytime you see it, that was coming out of the crash. So don't even worry about that. And so when you see those moving averages starting to converge together, you usually start to get a nice move in this. But again, if Avco or Broadcom just craps the bed, then who cares, right? The market goes, nope, see you later. We'll just rally or try to keep this rally going without semis because you've had it so far, right? Then just keep piling into the other ones. And it wasn't but a week ago when I asked the question, are they really going to have a year-end rally without the Mag 8? Right? Really Mag 7, but Mag 8 if you include Avgo, right? And you're like, there it goes. They just start pushing them up because they know when they push those up, you can go ahead and take profit in the other ones. You don't need a whole lot of other stocks pushing up because, again, those 8 stocks account for, what is it, like 30-something% on the SPY, 40%, maybe more on the Qs. You know, and they're going to keep doing it. Sure looks like that. Again, at some point in time, you think there's going to be tax loss harvesting, some kind of, you know, maybe profit taking, whatever. But right now, they just keep pushing this stuff up, right? And whatever's underwhelming, just put money into it and let it go. So we're going to see, again, a lot of this depends on Broadcom and how the market wants to accept the earnings, okay? You saw Adobe just report. They got dumped, right? So I expect software stocks may take a hit tomorrow. We'll have to see. Plus a PPI, which we'll talk about in a minute, coming out. But understand this right here. People will tell you, oh, man, when the Fed cuts next week, if they do, oh boy, you know, these things are going to just absolutely rally, and IWM and KRE and all this fun stuff. But all you have to do is pull charts on this stuff, guys. I'm telling you right now, when you pull it up, and you got nothing to do with no Fed rate cut, because here you go. You see the date? Right there, they cut. Right there, they cut. Right, this is IWM. What happened? It sold down. It's so. What do you mean? But they cut, Mike. They cut the Fed funds rate. It's supposed to go up. No, it didn't. Okay? No, it didn't. Did not happen. What happened though? What is this? The 10-year yield. This is the king of all kings. It went up. The bond market said, we ain't buying it. And it ran up. Okay? Got nothing to do with the Fed funds rate. Mortgages don't go off the Fed funds rate. They go off the 10-year yield. Okay? All the borrowing fees, they're going off the 10-year yield. Okay? Not the Fed funds rate. Right there. There's the cut. Wait a minute. It went down. I don't understand. Make sure I got the right date here. Can't be the right date. Nope, it's the right date. Nope, KRE went down. Regional banks went down. Why? Oop, there's the 10-year. It went up. Put pressure on it. And so, you know, this whole thing about, oh, they're going to cut next week and that is not the case. You have to start watching what the bond market is trying to tell you. I don't know what the heck it's trying to tell you, what the 10-year is trying to say. But when you look at this, again, November 7th, that's when they cut. We go back over here to our friend, right? There's KRE. There's November 7th. Nope. It was pumping before that, right? Well, what happened? Sold off after the cut. What do you mean they cut, Mike? I don't understand what happened. They cut. And then why did it pump? Look what happened. The 10-year started rolling over, and then it started going up. Okay? And when you look at IWM, right? And KRE is not as attached to the 10-year, but IWM has shown you many times it is. It doesn't mean all 10-year has to do is go sideways or down, right? But you look at that. They cut. Oh, they cut, and it dropped 6%. They cut right there, and it dropped 6%. So it literally had nothing to do with them cutting stuff, right? It's just the way it is. The 10-year has to sit there and go. And look, the 10-year fell off a cliff right there, and IWM actually went crazy up, right? And then the 10-year started bouncing back. IWM's been struggling ever since. So you're not looking at the cut. You're looking at the 10-year. Marry the 10-year. Talk about it with your spouse, your children, everything else. I'm just kidding. But seriously, just monitor that if you're planning on getting into these investments, okay? Now, when it comes to earnings, obviously in Lovesac, maybe is one you want to look at, but also there it is, Broadcom, Costco, RH, okay? Those are 3 big heavy hitters. Then when you look at the data tomorrow, here it is, core PPI, and then PPI, and then unemployment claims, natural gas storage, 30-year bond action, which has been a nothing burger so far for a long time. And so watch PPI, because sometimes when they run us up on CPI, if PPI comes in hot, they'll run us right back down. So pay close attention to that. Now, if you got anything out of it, as usual, please hit that like and subscribe button. If you like what you're hearing here and you like private videos and daily Discord and 2 private members videos, then think about signing up for the membership. Less than McDonald's combo, guys. Okay. So anyway, hope you guys have a good one, and I will see you tomorrow.